So this is what this live stream is about. But today I am going to start off with talking about how you can increase your wins when trading. Making a profit with trading, as many of you have already found out, is not so much about that one win or that one loss. It's more about your wins outnumbering your losses. Now that needs a certain level of consistency, and also needs a good, decent strategy. And to be honest, not just one strategy, but you do need more than one strategy. We're currently in a bullish market, so the trend, all in all, is upwards, which is good because for those of us who like to go long, I don't generally short stocks or coins. So what I want to start with today is I just want to start with talking about moving averages. I'll be talking about the larger moving averages today, which are the 50-day, the 100-day, and the 150-day moving averages, and why they're important to your trading success. So why are these moving averages so important to being consistent as a profitable trader? Strategies. Now, this is one strategy that I've found to work for me, and I'm going to pull up my Tesla chart. And the reason why I'm pulling up my Tesla chart is because I traded Tesla just this past 2 days, and I actually made a good win. And I want to explain why I traded Tesla, and I hope it can help you, during your trading journey. Looking at Tesla, we can see it's really difficult to understand whether is it bullish, is it bearish, because we start off here in this very nice bullish trend, but something happened around here, which was February, and this stock just kept on tanking. So I don't know how many days that was, from February 2nd all the way down to now. That was over a month, a month worth of the stock just showing up red more days than green. And so this yellow line, now this is the important line. I think you can see that price action fell through the 50-day moving average. It fell through the blue 100-day moving average right there. And it comes down to the 150-day moving average. And now the 150-day moving average, all these moving averages work out to being support or resistance, depending on which way you look at it. But in this case, it is support. Why is it support? Because you can see over here on the bullish end of things, price action was trading above all these moving averages, including this yellow, all-important yellow 150-day EMA. But when price action starts coming down, the more levels it drops down, the more bearish the direction is, the more bearish the trend. So it breaks through the red, it breaks through the blue. It actually broke through the yellow support. So it broke through the 150-day moving average on the 8th of March. But what happens the very next day? There's a bounce. Now, this is where you can get into a trade when there is a bounce of a major moving average. It bounced off the yellow. Not only did it bounce off the yellow, but in the same day, it broke above the blue. If you entered into the trade right down here, let me draw. Okay. Actually, I like to make this white. Okay. If you entered into the trade at the white line, you would come away profitable for the day. Very important. I purchased 3 call options. Now, for those of you who are more seasoned traders, maybe you trade futures or even you trade options, you will know that buying one option is equivalent to buying 100 shares. But it's cheaper than buying 100 shares. It's riskier than buying 100 shares, but it's cheaper than buying 100 shares. So I bought 3 options, which was the equivalent of 300 shares, and you know that was a profitable trade. So that's talking about Tesla. Now I want to come off of Tesla and move into the coins, and either this one or this one. Okay. Well, the main one I want to talk about is this band. Now, band, USDT, yes, band and tether. Band, I think I got this from a trading signal platform that I'm subscribed to. And to be honest, I don't really use trading signals except for this one. And that's because I don't really use trading signals, but I do have a subscriber who used it and needed me to help her with setting it up. And so I started looking into it, and it's actually called, I'll put it in the box. For those of you who are maybe interested in trading signals, it's called My Crypto Paradise. I hope I got the name right. mycryptoparadise.com. Anyway, something like that. And so they do send out occasional trade calls when they have done their analysis, they've done their charting, and they believe that these coins are going to have a big move anytime soon. So this is where I put this particular coin on my watch list. And that's another thing I tend to encourage, that you use watch lists. Now, another popular question on my Telegram platform is, and this is exactly how the question comes. It's like, oh, I wish I had gotten into this coin before it moves. Can anybody tell me how to get into these coins before they move? So there's a coin that's moved up 20% overnight, 30%, 15%. Of course, you want to have been in on that coin before the move. And the only way I really know how, aside from subscribing to trading signals, and that can be useful as well, the only other way to be in on coins before they move is to have them on your watch list from the previous move, keeping an eye on it. So in this case, the previous move, I would say, was here. The previous big move was the 6th of March, and it moved from $12.39. It moved over 3 days. It moved to $15. So it moved up about $3 over 3 days. That's a good size move to make a decent profit. So assuming you missed out on these 1, 2, 3, 4 green candles, okay, so what you do, you draw a level. Draw a level. Get very comfortable with drawing levels, because this white level represents resistance. At this point, it's resistance. Why is it resistance? Because you can see price cannot get past the white level. It tries over here. It's constantly trying. It tried over here. Over 3 days, it couldn't get above that price level. It tries over here. It can't get by. So that's a good, strong resistance. You want to be on board when it does eventually move up, which it did on this day, the 31st of March, which was, what, 3 days ago? It moved up right there. Now, if you had it on your watch list, as soon as it broke above the white level, you would have got in on this nice, big, chunky move, and hopefully have made a profit. And so this is how I use the larger moving averages. This is how they inform my trading. This is how they inform my trading. And that's really all that I want to address for today. Now, if I have only one indicator that I could use, I would use my levels, to my support and my resistance levels. And if I had a choice of a second trading indicator, then I would use the moving averages. Now, I wouldn't enter into my trades on the 50 EMA, and I wouldn't enter into my trades on these. I definitely would not. I would use them to inform me that the trend is heading up or that there's going to be a major move. And maybe next week I'll talk about volume, because or maybe I'll make a checklist of some of the things I look at before I enter into a trade, because volume is key. Just to recap, these higher up moving averages are the moving averages that you use to inform you if there's going to be a big move. And we can see, especially if the market has been in a particular trend over a period of time, especially a bearish market. Bearish markets, if you're a bearish trader, if you're a short trader, then you're always looking forward to a bearish market. But if you're more a bullish trader like I am, you're more into going long on positions, then a bearish market is a good thing, because think about it this way. The price of the stocks or the coins that you eventually will buy are getting cheaper and cheaper. So you need to know when the price is at its all-time cheapest, so you can enter into the trade, because the only direction it's going after it's at its cheapest point is it's going up. And that's what your 50 EMA, your 100 EMA, your 150 EMA, your 200-day EMA, these larger EMAs actually help you catch that reversal.